Welcome to Digital Asset News, everybody. My name is Rob, and today we got a lot of things to go over. So again, it's just one of those days where this could be a catastrophe. However, there's some things that actually turned everything around. That is, the CPI numbers came out, and they are actually quite positive. So we're going to take a look at that. Crypto pumps a little bit, but don't get too excited because there's a little bit of a problem with Tether and losing its peg. Then we're going to talk about the reason you might be here, which is the thumbnail on the title. Take a look at Sam Bankman Fried as he talks about what actually happened and the things he's trying to do to move things forward. And also, we're going to take a look at how Gary Gensler, the SEC chair, actually might be in some hot water with a congressman, especially with the things that were going on between Gary Gensler and Sam Bankman Fried, allegedly. Don't sue me. And then lastly, we'll do a little iTRUST and Solana updates. And lastly, just as everybody, to remind everybody that tonight will be the Puerto Rico meetup. And I'll tell you exactly where that is and the time frame. But first, let's just jump into the big story. This just came about like 3 minutes before I actually came on. I was just perusing Twitter like I like to do. And a friend of the show, Ben, comes out and says, hey, guess what? Headline CPI is 7.7%. That's pretty good. Inflation's actually looking like it's going down. 8% estimated. Core CPI, 6.3. It was estimated 6.5%. So that's not bad. And if we have those two numbers come out, and remember, lately we haven't seen much positivity as far as the inflation rates. Unemployment numbers were actually dropping instead of going up. So I didn't expect this to come out. This is like a gift from heaven as inflation starts to come down. So maybe the Fed is doing the right thing, or as much as they possibly can. So we've got that. And how did the markets react? Well, pretty darn strongly. I mean, strongly enough for what happened. I mean, geez, I got to tell you, the resiliency of Bitcoin is unbelievable, and the entire crypto market. I mean, you just saw essentially another exchange collapse. And the biggest exchange, Binance, said, we're not going to bail you out because we can't, because you guys screwed up too bad. Now we see CPI numbers come out and people start to look long-term and go, you know what? Maybe it's not so bad. Without those numbers today, we wouldn't have these numbers right now. So Bitcoin's at 17.7. It's up 4%. Ethereum crushing it today, 24 hours, 12%. And I know people are sick of hearing the buy the dip. I'm tired of saying it. I have stopped saying it, but this was that one time when you could have bought the dip and came out looking pretty nice. However, I think there's more tragedy upcoming, but right now, enjoy it for what it is. And remember, if you made some profits today, if you did buy that dip, don't forget, take some profits, not investment advice. Anyhow, crypto is looking relatively strong across the board in the last hour. I think most things are up. Even Solana is up 6%. Amazing. Shiba Inu, I mean, everything. Is anything down? Let me ask you that. ETH Classic. Okay. But that's what's going on. Again, I think there's some trouble on the horizon. And this came to us from a friend of the show, Tiffany Fong. Her and Aaron Bennett were on the show to talk about Celsius. And she just tweeted this out that USDT lost its peg this morning amid rumors that Alameda and FTX are attempting to short the stablecoin. Well, there's one way to find some liquidity, short a stablecoin. Tether has begun freezing USDT addresses owned by FTX. How is that decentralized? If this is true, I'm just going to lay that out there in the comments. Like USDC can also do this too. They can freeze accounts, but you just freeze accounts? All right. And 46 million USDT on the Tron blockchain. And there's some things going on between Tron and FTX. There's a rumor that Sam is going to come out and spill the beans on Justin Sun for whatever deal that they had behind the scenes. That's just chisme and guesswork. I have no idea. I can only tell you what I know. And Tiffany says, welcome to today's dumpster fire. I got to tell you, some people see a dumpster fire. I see opportunity. And here's what she's talking about here. So in a day, we went from, and it's not like it went to like, it didn't pull a Luna where it went to like, nothing. It went from $1 or 0.99 to 0.982, and then it bounced right back. So there's some shenanigans afoot, and that's what's going on. So that is the first part of it. Now let's get into, I think, one of the most interesting things today, besides that, is one of the big things. Sam comes out, and this is what he says. I'm just going to read it to you. So Sam, as we know, is the CEO of FTX, and he put it out there. Originally, he put out there, nothing to see here, folks. Everything's fine. This was 3 days ago. Then they became illiquid. Then they became insolvent in a way, and then they reached out to Binance. Binance said they would like to help them out, but they need to take a look at the record books. CZ said that's what's going to happen. They looked at the record books and the all the financials and said, "Look, we can't help you. You guys are too much in the dark." And they closed the deal. And then after that, we saw a huge drop in crypto. Bitcoin, if you don't remember, last night went into the 16th. I think almost 15. I want to say 15,700. Correct me in the comments. That was quite a dip. Again, if those CPI numbers didn't come out, we would have seen huge dips. We would have seen Bitcoin, I think, down to 13, 12K. Just guesswork. So Sam now comes out and says, this is what he's got. I'm sorry. That's a good way to start. That's the biggest thing. I effed up. I should have done better. I've been communicating more very recently, except for the tweet that I deleted, but that's neither here nor there. Transparently, my hands were tied during the duration of the possible Binance deal. I wasn't particularly allowed to say much publicly. But of course, it's on me. And that's the way to do it. When you screw up, you say it's on me. However, it doesn't really help too much when you got people who can't take their funds out. Here's an update. This is, and he puts this in bold, and I need to make this crystal clear. This is all about FTX International, the non-US exchange. FTX US users are fine. Treat all these numbers as rough. And my question is this: why is it that FTX US is not affected, but internationally it is? I think there's probably some part to this. I'm sure it has to do with how things are moved around, and how the operation worked, and how the procedures went by. But I got to tell you, I think that one of the reasons why that FTX US is up and running and FTX International isn't is because in the US, the regulation is so stringent. And of course, Sam was a big donor to a lot of these different politicians. I know some people will say, well, he's all Democrat donor, and he was one of the biggest donors to President Biden. However, he's come out and said he's on Republican. It doesn't matter. What really matters here is that I think what happened here is that FTX is like, we got to stay on the straight and narrow. We got to, toe the line, because these guys are going to help us out. And I think when people talk about, they say we should never have regulation. We should have regulation. We should have some regulation. I've talked about this till I'm blue in the face. I just don't get it. If it's the thing about the exchanges, these guys have been screwing up left and right, up and down, sideways. There is no reason why they shouldn't have a little bit of regulation come in and go, let me see your books. Are you guys doing what you say you're doing? Are you misappropriating funds? Are you using the funds that shouldn't be? Are they intermingling? What exactly are you doing? I'm not talking about regulation for DeFi products and things like that. I'm just saying a little regulation would go a long way. And I can see why this would probably behoove us as retail to get the regulators in there a little bit and say, let me see your books. Are you baking the books, pun intended? And what exactly are you doing? And how are you working these things out? Because I think the reason why US has made it is because they're like, we got to stay on the straight and narrow. Same thing with every other exchange. Now, if you don't want to do that, you don't want to do that. It's regulation is going to happen whether you want it or not. Okay. So would you rather be the voice in there? Would you rather be the person that says, we like this, we don't like this? Or just like them to slap it on? Because this is what's happening. And I'll get to what Brian Armstrong said at Coinbase in a second. So moving on. No, I think my blood pressure went up. FTX internationally currently has a total market value of assets and collateral higher than client deposits. Let me say that one more time. FTX International currently has a total market value of assets / collateral higher than client deposits. The question I have is, are they including the FTT token? Because if they are including their token for the FTX platform, then okay, I see that, but that is funny money. They made that out of thin air. You cannot peg it to that. Now, if it's something else, it's like, okay, we bought a bunch of Bitcoin, or we have US dollars, or we have treasuries and it's backed, and that's what it is, and we have all the crypto, gotcha. But if it really is the if the FTX token is what's backing most of it, that's not true. That is not cutting water. But that's different from liquidity for delivery, as you can tell from the state of withdrawals. Okay, the full story here is one I'm fleshing out, but at a very high level, I effed up twice. The first time, a poor internal labeling of bank-related accounts meant that I was substantially off of my sense of user's margin. I thought I was way lower. His sense was this. He thought that there was no leverage, but their actual leverage was almost 2x. And liquidity was almost 1x Sunday's withdrawals. Because of this, when it rains and pours, we saw roughly 5 billion withdrawals on Sunday, the largest by a huge margin. I got to tell you, when you're up at this level, this high, one small mistake, one error, one thing that you just take your eye off for a second screws everything up. And it just goes to show you that the people that you surround yourself with are what is going to raise you up or what is going to crash you down. So pick the people that you hang out with and you listen to very wisely. And so here we are, which sucks, and that's on me. I'm sorry. Anyway, right now, my number one priority is by the users. So right now, we're spending the week doing everything we can to raise liquidity by shorting Tether, apparently. I'm just kidding. I don't know if that's true. Don't sue me. I can't make any promises, but I'm going to try. There are a number of players who we are in talks with, letter of intents, term sheets. So that's good. Maybe instead of Binance, which I think would have been the best option. But they're still talking to some other people. Great. I don't know if that's going to go through. Every penny of that and of the existing collateral will go straight to users, and investors, old and new, and employees will have fought for what's right for their career and we're responsible for any F-ups on my part. End of the day, I'm the CEO, which meant that I was responsible. So what does this mean going forward? I'm not sure. That depends on what happens over the next week. But here's some things I know. First and foremost, Alameda Research is wanting down trading. That's good because there was a story by Wall Street Journal where it looks like FTX gave billions of dollars to Alameda Research, which is the investing arm, and they blew it all. They aren't doing any weird things I see on Twitter and nothing large at all. Okay. And one way or another, soon they won't be trading on FTX anymore. The reason why is because they screwed up big time. Second, in any scenario in which FTX continues operating, its first priority will be radical transparency. Transparency it probably always should have been given as close to on-chain transparency as it can. And yesterday, that's what CZ Binance called for. He goes, look, we need to be more transparent. And he put out a list of everything of the cold storage wallets they have in Binance so everybody can verify it right now. So go take a look at CZ Binance. I think I might have it coming up, but that is called transparency, so you can make sure it's there. All the stakeholders will have a hard look at FTX, but all that matters right now is we're trying to do right by customers. A few other comments, and this gets pretty good in these next two. This was about FTX International. FTX US, the US-based exchange that accepts Americans, was not financially impacted by this S-show. Again, I think it's because straight and narrow, and they were the ones that are like, we can't do any shenanigans here because the regulators will come down. If regulators were already in there from everybody, I don't think this would be an issue for a lot of places, especially Voyager and Celsius. It's 100% liquid. Every user could withdraw, updates on future coming. At some point, I might have more to say about a particular sparring partner, so to speak, CZ Binance. But, glass houses. So for now, all I'll say is this. Well played, you won. Man, that's got to suck to come out and go, good job, CZ, for essentially... Actually, I'm going to take that back. It wasn't CZ Binance that sunk FTX. FTX sunk FTX. Let's make that crystal clear. They were doing some things they shouldn't have been doing. They were doing loans. They were doing whatever plays that they were doing. It wasn't an entity that says something or does something per se. If you are strong and you do the right things at the right time and you are prudent in your actions, these things don't happen. You will have some turbulence to be sure, but you do not collapse. So let's make that clear. It wasn't Binance. It was the things that were going on behind the scenes. And I just want to say right now, thank you to everybody who was listening, to a lot of people, not just me. And you followed the rules underneath. Don't invest more than you can afford to lose, where I say it's all gone. 100% scams means everything is a scam until proven otherwise. Don't leave anything on exchanges. Get that ass off as fast as you can. You can use exchanges. That's the on-ramp and the off-ramp. That's cool. I mean, that's what they're there for. But you don't have to leave it there. Use your ledgers. Use your tracers. Heck, even use your MetaMask wallets. I don't care. Don't use leverage. 50, 100x is crazy, and take profits along the way. That's what I've been doing. And it's working out so far. And that's what's going on. Anyhow, let me know what you think about that in the comment section. And now let's get to something probably unpopular, but this is the truth. This is Brian Armstrong, CEO of Coinbase, and he says this: FTX was an offshore exchange not regulated by the SEC. The problem is that the SEC failed to create regulatory clarity here in the US. So American investors and 95% of trading activity went offshore. Punishing US companies for this makes no sense. Again, to me, in my mind, regulation and clarity kind of go hand in hand. If they would just give us clarity, like these are the things we'd like to see for the exchanges, this is so you don't screw everybody, you don't intermingle everything, you don't take people's funds and then make these crazy ass loans and do something stupid. We want to see that, and we'll regulate that. Also, we're going to tell you what a currency is, what a commodity is, and what a security is, and then you guys can come in there and do your thing. You're either going to be the CFTC, you're going to be at the SEC, or the OCC. Man, it's like I'm back in the military, all those mnemonics. But it's the same thing. So again, Brian is 100% right. And of course, Brad has to agree, which he is right too. Brian is right. To protect consumers, we need regulatory guidance for companies that ensures trust and transparency. There's a reason why most crypto trading is offshore. Obviously, companies have no guidance on how to comply here in the US. And that's one of the reasons why Library just lost their case against SEC, because they didn't have any clarity. They did their ICO, and now here we are. So again, I'm tired of this beating around the bush and the posturing from Gary Gensler from the SEC and the CFTC going back and forth. I think it is a turf war, even though they say it's not. Just give us some clarity. Tell us the rules so we can bend the rules. Very simple. And speaking of my man Gary, this is Tom Emmer, friend of the show, husband, father, hockey fan, and congressman from Minnesota's 6th district, and also a big proponent of cryptocurrency. And he says, interesting, because Gary Gensler came on and says, I'll be joining Andrew Sorkin on Squawk Box at 8 a.m. to discuss recent developments in the crypto markets, which he was going to go there and posture and say, hey, this is why we need regulation. And he says, interesting, Gary Gensler runs the media while reports to my office allegedly he was helping Sam Bankman Fried and FTX work on legal loopholes to obtain a regulatory monopoly. We're looking into this. Maybe this is what BitBoy was talking about when he was talking about, I got some dirt on you, Sam. Who knows? But if that's the truth, first of all, it wouldn't surprise me. Nothing surprises me. But if that is the truth, Gary's out. Sam's going to go to jail for other things. No, I can't say Sam's going to go to jail. I don't know that. But Sam might get a slap on the wrist. You got to understand, it's different for rich people. That's just how it works. And we'll see what happens. But it's interesting that a congressman comes out and publicly announces this is what's going on. I don't think you could do that unless you have some relevant evidence. Anyhow, that's what's happening. Let me know what you think about that. And then I need to remind everybody about this. We talked about this yesterday, and I need to make sure everybody knows, is that there's a difference between the crappy centralized exchanges and the good crypto products that are out there, right? There was no double spend on Bitcoin, no reason to crash. There was no hole in the actual projects or blockchain. There was no hiccups. There was no problems. There was no more rug pulls. There was no big scams that I know of. And the projects themselves are just working in the background right now, and they're doing the things they're doing. The reason why the market is collapsed yesterday, or went, I can't say collapsed, it took a dip, just a Wednesday, is because of the exchanges. The products are doing quite well, actually, and they're making some big strides, and I applaud them for that. And this came across as a comment. I wanted to bring it up, which I thought was a pretty good point. This is from Commander Kronos, and he says, stop being so negative. Because I said, this is what I said. Well, crypto class of 2021, here's the opportunity you wanted. The market will probably go lower, so don't go all in right now. Which Bitcoin did go to 15.9, but it did bounce back up. So even if you DCA'd, I think you'd be okay. And Commander Kronos says, stop being so negative. Some of us think this is great. We've been waiting for this moment because we didn't discover crypto until 2021. This is our first opportunity to buy. And I thought about that. I go, that's true. I'm not looking at it. I'm looking at the lens through someone who's coming in 2017, not 2021. So right now, maybe this is what everybody was waiting for. And this is a good thing. I mean, I think over time it's a good thing. I just wanted to bring this to your attention. So let me know what you think. Is this your opportunity if you just got in earlier or in 2021? Is this the thing you were waiting for? Or does this freak you out? Because if it doesn't freak you out and you're doing pretty good, then you're way ahead of my curve when I got in. Because in 2018, I was sharding bricks when the market took a big dive. So interesting to see what you'll say there. And then also, the next part here is two things: iTRUST and Solana. Because friend of the show, there's this thing up here. It's called Open a Crypto IRA. People have been asking me a lot about iTRUST, so I'll just address it right now. So the reason why Celsius, Voyager, and FTX went down is because they got over leveraged. They did some things they shouldn't have. They were using the funds, your funds, they were using our money. I mean, not FTX. I got everything off there a long time ago. They were using our money to do loans, to gain yield, to leverage. I mean, you name it. The degenerate happenings that were going on were rampant. They were using our money. But iTRUST, you know how iTRUST makes money? It's very simple. They say, I have a product here. When you trade within that product, I'm going to charge you a fee, and I'm going to be content with those fees, and I'm going to build a business. That's how it is. The funds that you have in there, and even in their terms and service, you can take a look. There's nothing in there that says we're going to be doing loans or do this. It's all locked up in Coinbase custody, which is the same place that MicroStrategy has all their crypto. So here's what we got. iTRUST Capital Software Platform has no direct exposure to FTX. Its native token FTT are unlimited research. FTX is not used as a service provider, and FTT coin is not an investable asset in iTRUST Capital Platform. That's true. They don't have that. They have a lot of other things, though. I mean, and even they have staking for Polkadot. As Brian Armstrong of Coinbase said yesterday, the situation appears to have been the result of business decisions, leadership within FTX, not a direct result of asset or token behavior. iTRUST Capital does not touch client funding. Let me say it again. iTRUST Capital does not touch client funding. We do not lend, borrow, or leverage any client or company assets. We don't allow our partners to do so either. Our goal is always to help our clients and remain committed. iTRUST serves as a software platform to allow for clients to ensure self-directed IRAs that contain alternative investments. Try to maintain. And then the interim, Kevin Maloney made a statement, same things. And yeah, that's a good point. Rand Janty says, if my U.S. government would let me put more than $7,000 a year in iTRUST Capital, I wouldn't have joined Celsius or Voyager. My retirement would be a much better. That's a damn truth. So again, some people will say, well, Rob, doesn't that go against the ethos of crypto, of not your coins or not your keys, not your crypto? It's true. Because when you put it over there, it goes into custody storage with Coinbase. So you don't control your keys anymore. So everybody, I mean, we made that pretty clear here for iTRUST. However, I like you know what else it is? For the white paper, it was supposed to be Bitcoin is supposed to be a currency. It was supposed to help you build wealth. And one of the things that is hard to build wealth is when you get taxed up the wazoo by the government. So for me personally, I do not like to pay a ton of taxes. And if I can put that into a retirement account, and also I can only put $7,000 per year into that account because then I max it out. I won't lose my entire life savings if, God forbid, something happens. So that's what's going on with iTRUST. And it's true. So if you don't like those parts, don't use iTRUST. However, if you like the fact of no capital gains, no taxes, then take a look at iTRUST and call those guys. And that's what I do. I still have my Roth IRA, and you can take it out, but there's tax implications. So just be aware of that. And then lastly, Solana. I don't get this. Solana postpones token unlock. So we talked about yesterday how there was millions of Solana looked like they were going to be unlocked. I think it was, I forget the exact number, but there's a ton for the unlocked prospect, especially with Solana and the staking. They were going to be able to unlock those Solana tokens and then they could sell. And as things were going down, we thought that there would be quite a big sell-off. However, if we look back here, Solana is actually doing just fine. I mean, where'd it go? 4.3%. I mean, it's down 40% for the week. Okay, you got me on that one. But hey, look at Polygon, up 30% for the week. Just saying. So Solana postpones token unlock amid double dip fears. Developers unaffected. I don't know if this is 100% true, so you have to fact check me. Solana postponed its staking unlock period for 2 days, while Solana developers were still able to unlock and liquidate their sold tokens, according to Dr. Profit Crypto. And he's got some on-chain data. I'm not for sure if this is 100% true. Postponing the unlock also postponed the anticipated double dip, giving time to Solana developers to unlock and liquidate their sold tokens from the current price. If that's true, that's pretty bad. And if that's true, that's pretty centralized. So it is what it is, and that's what's going on. And that's essentially what's happening today in the crypto market. And lastly, I will just say this, is that if you had a rough week, which I think most of us have, right? We're going to do, if you're here in the Puerto Rico or San Juan area, we're going to do a meetup tonight. It's going to be, I said 5 to 8, but I'm going to make it 5:30 because the traffic's awful around that time. And I said, hey, who's up for drinking some beers? Need some brisket. So meet me down at, it's actually called Taste the Smoke, but it's the San Juan Smokehouse. And what I'll do, let's see, what I'll do is I'll put this tweet, if you don't, let's see, meet up tonight. There's a link to the tweet, so you can find the smokehouse and you can meet up there and talk. And it's this, the only thing we're going to do is I just thought this would be like the perfect time because everybody's having a pretty crappy week. Although, if you really zoom out of it about what's going on, is it that bad? I mean, isn't this kind of like this is what I thought was going to happen. I thought we'd see more pain moving into 2023. I thought we'd have a little bit of a pump after midterms, and it looked like that happened a little bit. But the CPI numbers were a gift. I'll be honest with you. 2023, I don't see much better. I think there's a recession coming, and I think the market will be very choppy for a while. But again, as we always talk about in the 4-year cycles, very simple. I mean, things are kind of lining up. Could be wrong, but I think that things will be just fine over time. And to me, I feel like this just gives me more time to accumulate. I mean, imagine another year or so, 2 years of accumulation and getting into prices that are just pretty nice. I'll take it. Anyhow, that's what we have for today. Look, that will conclude everything we talked about today for the news. If you want to stick around, we'll do a little Q&A, and I'll answer all your burning questions to the best of my abilities. But if not, get out of here. Thanks for stopping by. I do appreciate you. And that is it for today. So remember, like and subscribe before on your way out. That would really help out with